Thank you, Mark, and a big hello from London. A second week of not so many weekly patterns in the markets this past week, but still some interesting ones. We had what appeared to be an interesting weekly key reversal down in the US dollar index last week, as the market was relatively close to the highs. However, there has been no follow-on lower this week to this pattern, rather a reactionary move back up, still within last week's range, but towards the top end of it. Looking at the individual currencies, there was a weekly key reversal down last week in the US dollar Indonesian rupiah. And this was quite interesting, as it did not follow the subsequent actions we saw in the US dollar index. Instead, we saw the beginnings of a follow-on lower, with prices probably forming a large and possibly significant double top pattern from May to date. Now, this did not apply to its neighbouring currency, the US dollar Malaysian ringgit, which instead had a weekly key reversal up last week, created on the last 2 days of last week. And though we have not had a true follow-on higher this week, prices could not be accused of not trying, as we have spent this week sitting around last week's close. However, the main constituent of the US dollar index, the euro against the US dollar, unsurprisingly also had a weekly key reversal up last week, but again, unsurprisingly, has not followed through higher. To be honest, I am somewhat also unsurprised by this, as there are a crowd of patterns all affecting the market all at the same time, and thus diminishing the impact of just one single pattern. We have, after all, a bright green end January to mid-April bearish shift pitchfork pressing lower, a purple August to September 2020 head and shoulders neckline extension currently at 113.91 supporting the market, and a mid-June to date bright red ascending wedge stroke triangle pattern capturing the very recent market, all influencing and pressing prices sometimes in the opposite directions, so it's not surprised a weekly pattern can get lost in all the noise. We also had in the currencies a weekly key reversal up last week in euro against the Japanese yen, and in this we did see a follow-on higher this week, though it has been a small one so far, but a legitimate one. Elsewhere in the financials, we had a weekly key reversal down last week in the NASDAQ composite index, which this week has seen a reactionary move back up into the middle of last week's range. Plus, we saw no other confirming moves in any of the other main stock indexes. What concerns me about this one is that we may be forming a possible descending wedge pattern or descending triangle pattern right at the top of the market. You may not agree with this idea, but you cannot doubt that we are having, since late May, descending highs and fairly static lows, a possible bearish indication. There was one other stock index I follow that had a weekly pattern, and that was a weekly key reversal down in the Saudi TDW main index last week. This market has been in a decline since mid-April, but the weekly key reversal down last week has instead seen a reactionary move back up to well within last week's range. Over now to the commodities. We had an interesting weekly key reversal down in the ICE EUA carbon futures for December 2026 last week. This week we have seen a strong reactionary move back up, moving up well over last week's range, and ties in with the overall bullish moves of this market since February. Next is spot platinum, which had a weekly key reversal down last week, which complements the weekly key reversal down seen 7 weeks ago, and also the monthly key reversal down seen in May. However, this week we have seen a reactionary move back up, though still well within last week's range. I suspect this might have been prompted by the congestion we saw acting as support between late September to mid-December last year. Finally, I should mention this because technically it did happen, but I always treat such actions with a great deal of skepticism. But we did have a weekly key reversal down in Chicago lean hog futures, and I can only stress this highly, but only on the continuous daily charts, and we've not seen a follow through this week. As always, I'm happy to answer any direct questions with anyone who's interested in that. I'll finish this section from London, and I hope you found these comments useful. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.